Hey everyone, welcome back to Small Account Strategies. I'm Tyson France. Today we're going to look at gold in comparison to what may happen with Bitcoin and the new ETF approval. So if you've been in the space and if you've been watching the news and listening to crypto influencers or money market influencers or watching CNBC or just listening to the day in day out of the Bitcoin ETF and crypto news and all that stuff, you've probably heard a lot of comparisons to the gold ETF that was launched back in 2004. So 20 years ago. A little bit less than 20 years ago because it was November of 2004 is when the gold spot ETF was approved. So thinking back to November of 2004, I have no idea what I was doing, but I was living in Orlando, Florida, probably working like 60 or 80 hours a day. So I definitely was not paying any attention to what was going on with gold or any other stock outside of maybe Apple or Google. But anyway, so November 15th, 2004 is when trading opened on the gold the gold spot ETF. So if we look back a few months leading up to that, now this is the price of gold. This is not the gold ETF. This is not GLD. What we're looking at right now, I have to zoom back in here. Every time you go out on TradingView, zoom back to 2004. All right, there we go. So looking at this chart, again, this is the gold price, not the gold ETF. This is the actual price of gold. So on November 15th of 2004, the price of gold was somewhere around $440. So the day that trading opened, leading up into it, it ran up probably with the news of this spot ETF. And then right around December of that year, so about 2 or 3 weeks later, it peaked. So it went up from the day that it opened. The ETF ran up about 4%. Being generous, it ran up about 4%. And then had a pretty sharp correction. And that correction was roughly about 5.5%. Now, of course, we're talking about the price of gold here. We're not talking about Bitcoin. We're not talking about the same volatility that we see in the crypto world. This is a totally different asset. But since the gold ETF is the closest comparable that we have to a Bitcoin ETF, that's why we're comparing this. So when we look at where the gold ETF peaked, which actually we'll do another measurement here, from the very top to the very bottom, that was about a 10% retracement. And it bottomed in February of that following year, 2005. So from November to February, that's what, 2.5 months. So mid-November to second week of February. Yeah, about 2.5 months it bottomed after the ETF was approved. But the more interesting thing to me is the amount of time that it took once it created a peak price after the ETF approval. The price peaked around 457, somewhere in there, and then went down and consolidated for a total of 304 days. So about 3 months shy, or about two months shy of a full year. So for about 10 months, it consolidated, and we did not get a higher price in gold until 304 days later. So it's not like the ETF was launched and it just went vertical after that. It did after 304 days later, after it created that new price, it did go vertical. The price of gold absolutely exploded. Of course, it had some pretty significant drawdowns along the way, but we zoom out here and look at it on a monthly, since it's such a massive chart. I mean, you look at this green line here is where it was launched, the ETF, and it ran up. Let's see if I can get a rough measurement on this and zoom back in just slightly. Let's see. Let's measure from the day or the level it was launched, right around 440. First blow-off peak was, now my drawing's in the way here. Get that out of the way. A 337% move. And then if we go back to the most recent peak from launch, so 20 years ago, the price of gold at its most recent peak is up 387%. So almost 400% in 20 years. That's a pretty decent rate of return, I would say. I mean, if you invested $10,000, in 2004, you'd be pretty happy, I think, 20 years later with that rate of return. Of course, gold has not been the best performing asset in recent years, but when you look at this chart on the monthly, this is a pretty nasty looking setup. We could be looking at the mother of all cup and handles. We had this first peak back in August of 2011, then another peak in August of 2020. So a 9-year gap forming our cup right here. And then we started forming a candle. A handle. We started forming a handle right here. Now, typically what you want to see is a handle that goes down, which I guess it kind of did. Created this V pattern and started working its way up. But this is now the, 1, 2, 3, 4. This is the 5th month that we are now attempting to break above, roughly $2,050 on the price of gold per ounce. So that's a nasty looking chart. I mean, we're almost, for the most part, I mean, yeah, it's gone higher from this original peak, but you could almost consider this range of consolidation right here. We're talking about 4,505 days. That's September of 2011 to January of this year. That's a lot of consolidation. That is a lot of time for it to only have gone up from September in 2011. It's only gone up maybe 11 or 12%. So just for sake of comparison, if you were looking at this gold chart and you were like, oh my God, all it does is go up, I'm buying right here, and you were that poor guy who bought in September of 2011 and you watched your investment drop, 50% all the way down to $1,000, and you're now sitting at this level, and 13 years later, you're only up 12%. I mean, at least things are looking pretty good right now for this run. I don't actually have any Fibonacci retracements on this. I don't know if gold is necessarily going to trade on a fib, but let's see what happens here. Peak down to a base. All right. It actually, it touched the 2618. It pretty much touched the 2618 and got rejected pretty hard. Now, if we take that as a peak, and draw that over to about there. All right, and then we'll draw one more because we have another peak here. Draw that out to about there. Now, I'm probably not dollar accurate on these fib retracements, but yeah, I could very easily see a $2,500 ounce of gold very, very easily. I think this range right here is almost a definite and probably pretty soon. It almost feels like, let's put a trend line on here. It almost has the feeling like it should happen. Well, definitely, I would think in 2024. Well, I shouldn't say definitely. Nothing's definite. Again, not financial advice. I am not your financial advisor. This is only for educational purposes and my opinion only. But yeah, so $2,500 on the price of gold. Of course, I'm making this a lot more of a gold video than a comparison to Bitcoin, but I'm just sort of thinking through this because this is how Bitcoin could act. It's good to study these comp charts because, we could be looking at something similar in Bitcoin. But, just a real quick, a $3,000 ounce of gold for sure. I think that's very much in the cards within the next year or two. So probably not a terrible investment. I could very, very easily see a higher than average likelihood that an investment in gold at this level could be worth about 40% more in about 2 years. If not 40 to 60% more in 2 years. I could see that being very likely. Anyway, so going back to what I was originally saying, 304 days. It took 304 days for us to create a new higher price after the original peak once the gold ETF was launched. So what would happen in Bitcoin if something similar played out? These arrows are here from a previous video we made. But let's see. $304 days. So let's just go ahead and measure out. Now, we sort of have to wait and see what happens with the price of Bitcoin over the next couple of days and weeks, because we don't know if we actually have our peak yet. That run up to $49,000 on the day it was released, I'm sort of skeptical that that's going to be the top before we get another pullback. It just seems a little bit too obvious and too manipulated for an asset that is highly manipulated. And, there's a lot of stuff that goes on in the crypto space as far as suppression and, manipulation. So I'm not necessarily sold on that being the peak. I could see a run up closer to $50,000 before we actually do pull back. So if we do run up to a new high, say $50,000, somewhere in there, and that happens in the next month or so, that's going to affect where that 300-day span would take us. But we'll just go on the data that we currently have. So let's just say 304 days from the point the ETF was released. That would take us out to about November. So let me actually draw this down here so that we can see a little bit better. 304 days Let's just do 301. So sorry, I have to keep redrawing this, but every time I click away from it, I wish TradingView would lock those in. But anyway, so 304 days takes us out to November of 2024. Now I could see us running up and then consolidating down and contending with this uptrend line. There's a lot to really talk about and digest here. There's a lot of structure in here that would have to play out for us to take 300 days to create a new high. Again, it's possible we could stay below this trend line throughout this entire year and then break out later on. That would certainly be a lot healthier than just blowing right through that line and testing new highs. But I just wanted to give us an idea of what 304 days would look like if it took that long for us to get to a new high since the ETF has been launched. I think there are a lot of very plausible comparisons to gold as far as Bitcoin goes. I do not think the chart is necessarily going to trade in the same way. We're talking about a 20-year difference. We're talking about a tangible asset versus a digital asset. We're talking about a finite asset versus maybe not an infinite asset, because gold isn't infinite, but we are finding more gold every day. We are mining more gold. We will one day stop mining Bitcoin, not until I believe 2140. But Bitcoin is a finite asset, and an asset that is lost and essentially lost forever every day. Like it's a completely different comparison. So I could see, and if you're interested in the scenarios that we sort of drew out in Bitcoin, we just actually released a plausible scenario video for Bitcoin, so I definitely recommend checking that out. But while gold and Bitcoin are comparable in a lot of ways, I think they are vastly different. I think they are going to function very different. I know I would never want to bet against the charts. I would never want to get a bet against Bitcoin's history and what it has done over and over and over again in these 4-year cycles in the past. But at some point, the amount of money that is coming in from these ETFs has to be taken into consideration and almost has to have an effect on what Bitcoin will do in terms of its price. I just don't see how it wouldn't. And if it doesn't, then we can finally put to bed any notion that the ETFs or the money that's coming in would affect it, at least in the short term. I think in the long term, all the money that's flooding into it will eventually act as a rising tide and push it to higher highs than maybe we could have expected. Maybe the effects of the ETF won't be quite as seen early on, but will be seen later in the cycle as sort of a buoying effect. Another scenario is all the money that's going to be coming in could act as a stabilizer that reduces volatility, so it could run up, and then maybe we don't see the types of corrections that we've had in the past. Maybe we don't see the 40 to 60% corrections, 80% corrections that we've seen. Maybe they're more like 20% corrections that we're dealing with. So, could run up and could act a little bit more like gold because of this ETF situation. So, if Bitcoin runs up to up to say $120,000, or let's just even say $150,000 just to shoot high. Let's say it runs up to 150 and then retraces. 20% would not actually be a lot at all. maybe a 35% retracement. Maybe that's all we get down to $100,000. Maybe those are the types of corrections that we could see. Going back to gold again. Let's go back to the monthly just so we can sort of see. So the biggest drawdown gold had since the ETF was this one here with the peak in 2011 and then down to, well, over the course of many years, from 2011 to 2016. So over the course of 5 years, it dropped 45%. So, yeah, it's a very slow-moving asset as well. I don't think Bitcoin is going to function that way because of the finite nature of it. With the halvings that it goes through, just the way it functions, I don't think it's going to be the same. And again, I don't want to bet against the charts. Like you look at the structure here, and yeah, I can see with my own eyes, like it does look like it just topped. It does. It really does. Like you could even draw another trend line down here. To compare it to the one that we're dealing with now. And maybe it's not that sharp. Maybe we even go back to about here. But yeah, it's something like that. Maybe we even draw it. Could even do something like that. Not that it really matters. I mean, that's what we were dealing with. But, when I look at this and it dipped and this, yeah, it looks like it wants to come back. I don't know. We just have to wait and see. But in terms of its comparison to gold and the gold ETF, I'm crossing my fingers and generally hoping that we get one more push higher. That's what I'm hoping for. I could be completely wrong, and it's just as equally likely, maybe even more likely, that it actually reverses and comes down to the mid-30s again. Or at least tests 40, something like that, like the high 30s, low 40s. That's probably more likely than it running up to 50. But if it runs up to 50, again, not financial advice. This is my own personal opinion. But I would be taking some profits at $50,000 if it does that. That's just my own personal opinion and what I would be doing with my allocations. Because then I would be expecting 100% a correction. Maybe not a sizable correction. Maybe if it comes back down to the high 30s, I would be looking to buy again. We'll see how the chart acts, how it behaves, but that's sort of what I'm looking at in terms of how it correlates to the gold ETF. If there is a correlation, we'll see. But using that as a gauge in the past. But anyway, that's our look at the gold ETF in comparison to Bitcoin. It'll be exciting to see how everything actually plays out over the coming days and weeks. But until we have our answers, we'll just keep reacting to the chart, and I'll keep creating videos and responding to what's going on in the charts. And we'll be back in a few days or whenever we have news or something new to talk about. Until then, happy trading.